Good morning, friends, family, futures traders, forex traders. It's Friday, and this is the market forecast. June 18th. I'm John Hoagland. Thanks for trusting me with your time. That was a lot of reiteration of F words, and we're hoping that you didn't say too many of those yourself this week. We learned a lot this week, and we've got one more day of rollover. It is quad witching today, means everything futures and options related is going to expire, and the June contracts are going to expire today. And we're looking forward to that. Rollover always makes things a little less clear for me in the markets, and as we try and kind of keep things in context and keep things clear, it just makes things a little bit more difficult. Speaking of accurate context, we're always thinking about risk management and trying to stay patient in our trading. So yes, 3 o'clock Central today, 4 o'clock Eastern is expiration. Anything can and sometimes does happen. We've got the S&P is looking to close the week lower. That's the first week, and I think 4 or 5 weeks that may actually come to fruition. We are facing the end of rollover. We won't have to deal with that in the equities for another 2.5 months. We learned this week that inflation, though they think it may be transitory, is real. The Fed may even move their time frame to raise rates up by a year. We're looking at 2013 instead of 2020, or excuse me, 2023 instead of 2024. We'll certainly learn more about that probably at the next Fed meeting in 6 weeks, and possibly in the Jackson Hole Symposium in August. Unemployment may be a little higher than expected. I don't think that's a big surprise to anybody. Crude prices top out on higher inventory and possible policy changes regarding Iraq. So we did learn a lot. There's a lot to learn next week. Next week we've got existing home sales, and Powell is due to speak on Tuesday. Wednesday, new home sales, PMI numbers, crude stocks. Thursday, jobless claims, durable goods, and GDP numbers. And Friday, the Michigan sentiment. So lots more information due out next week. Taking a look at the VIX this morning, VIX is up 14% as our equities kind of suffer to the downside overnight. It's up 14% at 2025. Dollar index is up, holding above that 92 level at 92.09 last I checked. And the 10-year yield remains about steady at 1.5%. Make sure that you like, share, comment, question, feedback, and heckle at will. Make sure you subscribe to our YouTube channel. You get notifications when we do go live. And what else was I going to say? I don't know. I got to say good morning to everybody, though. Good to see everybody here this morning. Murph, first in the room. You win the prize, Murph. Good morning. Ed Nelson, good to see you. Theo, Tone, Mr. Shine's Mystery Channel. Yes, happy quadruple witching. James, Richie, Andre, Cesar, JB, Bill Phillips, Jay Gilmo, Joaquim, Joaquim, good morning to you. Laura, good morning. Zurain, Greg, good morning. Vici, getting funded. Yeah, you can trade today, Vici, if you're funded. Absolutely. 100%. Tim G, Orion Trading, or is it Orion? Good day. The chef is here, Mr. Magianes, MSS Capital, KJ, Dr. VJ, Colin, Rob T, and Karabum. Good day. Something tells me that you may be from the other side of the globe there. You're going to probably getting ready to throw a couple of shrimp on the Barbie. All right. So, yeah, last day of the week, Friday. See if you can make a little bit of money and take the week home. Good morning, Vici. Yes, of course, no problem. So we've got the crude oil off for the last 3 sessions, starting to the downside today. Let's take a look into these charts and see what we see. All right, so here's the daily in crude. Let me get my my trusty glasses on here. All right. Well, our weekly kickoff high and last week's high are going to be somewhat pivotal for us this morning. We broke out above on Tuesday, Wednesday, Thursday. Today is Friday. Some pretty decent volume yesterday. But again, it is rollover. Today we are in the August contract. The volume has moved over. We've moved all our levels over to August, so we're trading the August contract today. There's about a 30-cent discount between August from the July contract. So just moving those levels 30 cents. Upside structure still remains in a pretty big way. I mean, really, we're just kind of centrally located in this channel to the upside that we've been in for 3-4 months now. Volume and open interest are going to be blurry today. We lost 37,000 in open interest yesterday, but I believe that more of a function of rollover. Taking a look at the 30-minute chart. All right, so we're holding above weekly kickoff high. We broke down below it in a pretty big way yesterday. Some pretty decent volume, and again, the loss in open interest is maybe less about long liquidation than getting a cheap rollover. Although I do expect that there was some long liquidation when we started to break down through that weekly kickoff high, which in the August contract is 70.90. Look at how target rich this weekly kickoff level has become, especially today. We have value. Okay, it was an imbalanced day. I'm saying that this market is in balance from yesterday, but a little bit out of balance in the longer time frame. We've got settlement up here at 70.78. We've got last week's high just above that. We've got weekly kickoff high just above that. We've got point of control right in that area. So this right here is an area where I'll be throwing a lure in because I think that there's fish up in this area. Direction unknown, but it gives you the opportunity in this narrow range to limit the risk. Risk. That's number one. When we see an opportunity, think about the risk. So inside the value area, I'm probably going to stay patient until we get to one of these extremes, the low from yesterday's regular trading hour or our target rich barrel of fish up here. So in the meantime, the market's really kind of in range and in value from yesterday. Again, watching for those extremes. We even have our overnight high right in this big barrel of fish. So we got 1, 2, 3, 4, 5 things, 5 reasons to look for opportunity up at this level if we get the chance. Take a look at the E-mini S&Ps. We are testing weekly kickoff low yet again. We did put in another all-time high in the extended trading hour session. Markets don't like that. It is quadruple witching. End of day today. This weekly kickoff level is going to be somewhat pivotal for us today. Okay, this is weekly kickoff low. Weekly kickoff high is way up here. So if we're going to hold this, that's an eventual upside target. But here we are testing weekly kickoff low, back in this area of balance, near the low end of this balance. We're going to look for opportunities near the lows here. Yeah, weekly kickoff is pivotal. It's 41.84 even is weekly kickoff low. Yesterday, we added 500 in open interest in all of the rollover activity, all of the momentum, and all the trading we did yesterday. We only added 500 in open interest. Seems suspect to me, but that's what the estimated number is. Doesn't bring anything directional into the marketplace. keep that in mind as you look for opportunities today, because again, anything can and sometimes certainly will happen. Here's the 30-minute. We we have no overnight inventory until just before, well, around 5 o'clock when the U.S. traders start looking at the markets. We have another target-rich environment in this area because we have settlement, we have value low from yesterday, and the point of control. So this was a kind of a target-rich environment early this morning. Perhaps some traders took advantage to the downside of that, but now again we're kind of pivotal. We're testing weekly kickoff low. We tested it here, tested it here, tested it here. Currently testing it. When is it going to give? Are we going to run out of buyers down here? Are we going to exhaust them, or are we going to exhaust sellers and have this market return back to the upside? Okay. Overnight shorts, well, if they are short, they're pretty fresh in those overnight shorts. They're going to be looking for continuation down below this level on the U.S. trading open. If we open with a gap and we can't close the gap, that's going to kind of increase the probabilities of a downside move. If we open in range or we close the gap and we hold above weekly kickoff low here, that increases the opportunity for the market to come back up and give us another opportunity in this barrel of fish right up here. Gap? Don't know. We out of balance? What's it look like? Not really. Just coming off the highs. Quadruple witching, how could it affect the market? It probably won't do much until the end of the day when the options all exercise, and a whole bunch of people might want to get out of those options in the futures. So it's likely to be an event at the end of the day, if anything. Last week's highs and lows, I'm using the extended trading hours. Yes, Jay Gilmo, you are correct. The light purple lines on the 30-minute are last week's high and last week's low. Okay? All right, so let's take a look at the NASDAQ, which is similar but different. The market is it's presenting as much stronger. It's much further away from a potential market state change to the downside. It's really been holding up nicely this week. And, I don't see that there's really any risk of a potential market state change. We're still channeling to the upside. We've got higher lows. We've got higher highs. Everything seems to be a little bit rosier for the NASDAQ. Our tech companies doing well this week. Another all-time high in the overnight session last night. Contract high, adding only 200 in open interest yesterday. I do find that interesting. Let's take a look. I mean, we were right up against all-time highs. We're coming off of it. Maybe we'll see a little bit of profit taking, perhaps, maybe today. Could be. 30-minute. Again, early traders probably more likely to be active in the regular trading hours already in the market to the short side, where we have no chance, no probability of opening with a gap. So we know that. Inside the range, no gap. I mean, it says to try and stay patient. That's really just what that says. We don't really have any repair. We tested point of control yesterday. Point of control is up here. No real consolidated area of fish available. If we can't continue to move the market lower, I think the market is going to come up and take out this overnight high. We don't know when, but the market's probably not going to leave this contract high in the overnight session. It's almost like I feel myself saying, well, if it doesn't go lower, it's going to go higher, which is painfully obvious. Direction unknown. We're basically kind of trading in value from yesterday. Tells me to try and stay patient as a better trade location may come as the day goes on. Gold. Okay. We have a breakout of upside structure in two ways here. This move to the downside, once we break this trend line and this weekly kickoff low, it's a pretty good probability that that's going to be a bigger break. We've taken market back right down to a previous weekly kickoff level down here at 1777. Big volume yesterday, but we lost 200 in open interest. Where are the sellers? Where are the people barreling into the short side here? We don't necessarily see them yet. Now, the day before, the open interest added about 1,500. So we added about 1,500 on this move. Higher volume yesterday. We lost 200. Doesn't seem to make sense. There's something not right there. This is going to be pivotal, this 1777. We've been dancing around it all morning. Take a look at the 30-minute chart. Oh, one other thing. This is a $100 range this week. $100. Direct to the downside. Be careful. Beware of the face-ripping pullback. We've been all sellers all week. It's Friday. We're going to see a profit-taking event back to the upside. Those opposing moves tend to be vicious. Be cautious of them. Protect yourself, because if it happens, it can happen real fast. Hey, hold on. We're not done with gold yet. Here's the 30. Okay, target rich down here a little bit, right? We've got settlement, we've got value low, we've got an important inflection level in a previous weekly kickoff level. So there's likely to be fish here, ladies and gentlemen. Whether those fish are deep or whether they're more shallow is yet to be known. We've got our overnight low right here, so 1773.50. It looks like we're gonna go take a look at that. Good overnight move on gold. Yeah, we had a lot of overnight longs in this market that since the open have driven price back to where they started, basically back to settlement. So this is a inventory adjustment. Inventory adjustments can sometimes have traders thinking that this is a bigger move to the downside. Not suggesting that it can't be. Of course, this market is in a downside free fall right now. We don't know when it's going to stop, but this area, this 1777, is going to be pivotal. Target rich area down here. There's fish here. Direction unknown. And for the euro, as is gold, as is the euro. Here's the 30. Here's the daily. Breaking out Wednesday to the downside brings move down to a previous kickoff level, swing low here. And our next swing low is really down here. There is plenty of space for this market to continue this move to the downside. If the dollar remains strong, I don't see why it can't happen. We had good volume on this move to the downside. We added 4,400 in open interest. That's something I would have been looking for in gold on the way down, but it didn't happen. We didn't bring in new business to the short side in gold the way we did in the euro here. This is a healthier downside auction, more likely to continue its move. Again, we've got a pretty decent move here this week. Be careful of the vicious pullback. Here we go. We do not have a gap. We do not really have any overnight inventory with which to speak of. We opened basically on the gap close, and we've been kind of pushing lower ever since. So we are out of balance. It is suggesting that a good trade location may come earlier in the session. I'm just not seeing it today. How short are we in our time frame, in the day trader time frame? That's really the kind of question that I find myself asking, and I don't really have a good answer for it. I can't put a finger on, how short we really are in the short time frame. in our time frame, our direct competitors, like-minded traders with like-minded wallets. Are we real short here? If that's the case, we may see that face rip and pullback. But if we aren't, and we still see money coming into the downside here, which is, I think, more likely again in the euro than in the gold, we can see some continuation. And the 10-year. Oh, the 10-year. This swing low yesterday is still putting in overall higher lows. Higher lows, higher highs. We have not broken that structure yet. However, coming back into this area here might be a little bit sticky to try and get out of. We lost 63,000 in open interest, maybe a little bit of profit taking off this move, off of weekly kickoff high. 1, 2, 3, 4, 5. The breakout down below weekly kickoff low brought in sellers. Maybe a little bit of short covering there yesterday. 30-minute, no gap, no overnight inventory, no reason to get overexcited here. Not much to see. I mean, the market is really just opening, driving back into value, reaccepting value over time. We have, 1, 2 30-minute bars that have closed back inside of value. This is accepting of value. Might make the market, there's a probability that the market at some point today could trade back to the low of value from yesterday after opening outside of range and value. It's, somewhat target rich right here. We've got, what is this? Last week's low. We have settlement. We have value high from yesterday. There may be a little opportunity here. We may find a couple of little fish over here. Again, direction never known. But there may be fish right about where we are. Throw a lure in, see if you can catch one. All right. So, my fine fellow futures family Forex traders, it's Friday. Let's have a good weekend. Looks like a couple of questions here. Quadruple witching, how could it affect the market? It's the liquidation of when the options exercise, and a lot of traders will probably want to get out of those futures contracts by the end of the day. So from 245 to 315, it could be an interesting thing to watch. VJ, do you consider the prior close to be a gap? They come back and fill that at some point of the same day, referring to ES. No, the gap is always ranges. So like when we open outside of the previous day's regular trading hour range, I consider that a gap. You're right, Dr. VJ. Settlement is can be a very important level in any of these markets. I'm going to go back to the charts here just for a second and just take a look at what we did here in gold. Okay, now it doesn't matter what market it's in. We ended up with too many short time frame longs in this market. When the market opened up, they didn't get what they were looking for, doctor. They were looking for more buyers to come in to push this thing higher, but they didn't come in. So all of these overnight longs have taken price back into range and all the way back to settlement. So the settlement can be a wonderful profit target. It can also sometimes be a decent opportunity for an execution. Look at where the settlement price is. It's near the low of value from yesterday. We've completed the value area special situation play. If we don't see more sellers come into this market, that may make some more of our shorts from earlier in the week think about, hey, maybe we should take some of those profits. So I'm really kind of pivoting on this 1777 level for an opportunity, perhaps. If we can't hold below it, for a face ripper to the upside. If we can hold below it, there's nothing that says we can't continue the move to the downside. Although I do believe that the open interest information from yesterday is somewhat suspect, I should say. Okay, we got about 3 minutes here. Let's take our deep breath. Stay humble, grateful, and creative in your trading today. Have a great weekend, everybody. Be kind to yourself. Be kind to one another. Wash your hands, and be ready for next week. You know these summer markets can be challenging. I know this week was pretty challenging, and that's what keeps us coming back. Is the knowing how difficult it is and actually doing it well and succeeding on just a number of trades. If your reward over risk is good, you're going to be making money. So have a great trading day. Have a great weekend. I'll see you Monday morning, same bat time, same bat channel for the market forecast. Until then, stay happy, stay good. Again, be kind to yourself. Be kind to each other. Have a great weekend.